You've been doing this how long?
I'm on my 25th year.
Okay, so don't lie, because we'll know. I mean, are you even a little surprised of how strong utilities have been this year?
Well, one wouldn't normally expect a 20% move out of utilities.
It's a utility. Sure. It's regulated growth. You know, they give us power. We turn on the lights. It's supposed to be safe income, not a 20% jump.
That's right. But, you know, we've had a number of things at work here that's made it just a great time to be a utility investor. And the first is the steady drumbeat of earnings growth and the obvious dividend yield. But what beyond has been driving this is interest rates, and also the visibility of earnings out of these companies probably hasn't looked as good at any point, over my 25 years.
Why is earnings visibility so great suddenly for the utilities?
Well, it's not great suddenly. It's happened slowly, and it's emerged over time. And when we talk about earnings visibility and the opportunity in that, it's really relative to the rest of the stock market. Right now, we're dealing with very uncertain times, and that's caused a lot of folks to get attracted to utilities.
Sounds like you've got really this sort of perfect mix, because you've got, the fear, so people go into gold and utilities and things like that. You've got what you're pointing out, the dividend yield, which is what's the average yield on a utility?
It's about 3%.
Okay, so double the 10-year note.
That's right.
And by the way, natural gas sitting at $2. So the input costs of a lot of these companies that use natural gas to fire their power plants is down.
But even beyond that, a lot of these companies are investing in renewable resources. And when we think about ways that investors can play green technologies, we think on a risk-adjusted basis, utilities are about the most attractive way to go.
Really? Because you could see the opposite and say, well, hey, some of these there's still coal-fired power plants in America, natural gas. You've got talk of a Green New Deal. How are these renewable plays?
Sure. Well, remember, utilities get paid on what they invest. And so to the extent that they're called upon to make new investments in green technologies, that provides them an investment opportunity and an opportunity for earnings growth.
Some of these names were showing NextEra, DTE. A lot of these names, I guess I'm old enough, John, to remember when they had different names.
That's right.
There's been consolidation, and sort of they've changed their names and everything. Are there any that stand out to you guys at Reaves and Virtus that look better than the others? Or as a group, are they all kind of similarly attractive?
Sure. No, a lot of investors do throw money at these companies for a simple macroeconomic play, but these are all individual companies.
Yeah, they don't think about you. They're
That's
like,
right.
It's a group of stocks. They're boring. Let's put the money in. But some are better than others, I would imagine.
That's exactly right. And it's a great time to be an active manager because, there are obviously 50 states. They each have their own regulatory jurisdiction. Some of them we like, some of them we don't like, and we try and do our best to. Who
do you really like? NextEra?
We do. We think
they're the biggest holding, by the way, by double in one of your ETFs.
That's correct. And it's the largest holding in the utilities ETF. It is sort of the premier utility in America. It's one of the best managed, and it's the utility, really, that a lot of other utilities try to emulate the most.